In today's lender review video, we are covering a mortgage lender that can help potential home buyers with bad credit who have just a 3% deposit. So if you have a 3% deposit and you've experienced some credit problems in the past, then make sure that you stick around. But before we do that, if you don't know who I am, my name's Josh Tomlinson. I'm the managing director of My Mortgage Finder. We are a bad credit mortgage brokerage. We help people get onto the property ladder and remortgage their homes who have had credit problems in the past. We have a team of over 30 and we arrange about £100 million worth of bad credit mortgages every single year. So today we're covering Vida Homeloans and their 3% deposit mortgage range. Now, let's go ahead like we normally do when we do a lender review video and just ask ChatGPT who Vida Homeloans are. So, here it says, Vida Homeloans is a UK mortgage lender that specialises in offering residential and buy-to-let mortgages. They focus on providing tailored mortgage solutions, often serving customers who may have complex income situations or who might not fit traditional lending criteria. Vida Homeloans is known for its flexible approach to lending and operates as part of the Charter Court Financial Services Group. So I would absolutely agree with the summary. Vida Homeloans is one of our most commonly used lenders and they are a great option for people who don't have a perfect credit history and maybe fall a little bit outside of the norm. Now, before we jump in and actually show you what the lending criteria and some of the lending policy that Vida Homeloans require is, I just want to really make clear what a big deal having a 97% mortgage is. So basically that's a mortgage that allows you to have a 3% deposit. So you're going to see 10% deposits are very common practice, but are typically one of the lower deposit options that you can put down in the bad credit world. And there are some 5% deposit options if you do have some bad credit, but really a 3% deposit option, Vida Homeloans do stand alone here. And this is really a big deal when it comes to past credit issues and actually buying a home. So here's a screen grab that I took from Vida's website earlier, and this is specifically what we're going to be looking at is their 3% deposit range, which is really known as the 97% loan to value range. So the qualifying product in this range, it's known as a Vida 36. So on the screen now you'll see a Vida 36. We're just going to be looking down this column at some of the lending policy that will ultimately apply and say you either qualify or you don't qualify. So the first one that we're going to look at here, it says months since the last default of over £250. So it says 0 in 36. What that means in basic terms is as long as you haven't had a default in the last 36 months that has been over the value of £250, you are okay. So just in theory, to be clear, let's say you had 5 defaults at £249, that would be okay, as long as one default hasn't gone over the £250 mark in the last 36 months. So that's what the first row is saying there. Then below, very, very similar to that, we've got months since last CCJ, over £250. So as long as you haven't had a CCJ in the last 36 months for over £250, you're fine. If you have had them in the last 36 months, as long as the value is under £250, they're actually okay with that. The next row we've got here is worst status secured payments in months. Secured payments, just to be clear here, we're talking about mortgage payments and secured loans. Secured loans is ultimately almost like a secondary mortgage. It's a loan that's secured against the property. So if you've never been a homeowner and never had a mortgage, nothing to worry about there. If that doesn't apply to you and you have had a mortgage, as long as you haven't had any late or missed payments on your mortgage or secured loan in the last 36 months, you're going to be okay. If you have, unfortunately, that's going to rule you out. Then here it says a number of missed unsecured payments over £250 in the last 6 months. Okay, clearly £250 is a real key value for Vida here, and what it's now measuring is unsecured payments. What do we mean by this? well, there's actually a description a bit further down the screen that we'll highlight for you. Unsecured includes loans, so unsecured loans, hire purchase, store cards, credit cards, and current accounts, okay? So you're allowed one missed payment in the last 6 months. Anything more than that, unfortunately, it's going to roll you out. Then the next row we've got is bankruptcies, IVAs, DROs, trust deeds. As long as they've been paid off over 3 years ago, that's actually okay. And then previous repossessions is strictly talking about properties here. If you've had a property repossessed in the last 6 years, it's not going to be okay. As long as it's been over 6 years ago, if that's ever happened, then that should be fine. Okay, there's one other crucial line that I want to share with you here, and it's further down the screen. It says higher LTV, which stands for loan to value, and what it's deeming here by higher is above 90%, so a 10% deposit or less. So all loan to values above 90% require the customer's credit file to be up to date with no current arrears or major unsecured items. So basically what it is saying is, if you are behind on any payments, these must be up to date and reflected on your credit file at the time of application. So they'll have had to be paid and brought up to date, and then that would have had to be updated on your credit file. So just remember, sometimes there can be a lag, which is a slight gap between actually paying and that being updated on your credit file. It's just really important that it has been reflected on the credit file before you make the application. So let's go ahead and have a look at some of the products that Vida Home Loans have here. So the first one that we're going to be looking at is they only offer a 5-year fixed rate with the 97% loan to value range. So you must be taking out a 5-year fixed product. And as we can see on the screen here, one of the options that they have, you can see here at the bottom, 97%, 3 and easy, 3% deposit. Vida 36, you'd be looking at an interest rate of 7.16%. It has a product fee on of £995. It's saying here that the maximum that you can borrow, the maximum loan that they will lend, is £750,000, and they actually give you cash back of £1,250, which, as far as cashback goes, that's actually really quite a high amount, and that will usually be paid on or after completion. Okay, they also have another option here, and this is like a fee saver option. So this will just quite simply mean that there is no product fee that's attached to this. So let's have a look at this one. So again, 97%, one Vida 36 right at the bottom we're looking at here. We've got is 7.51%. So obviously that is a little bit higher than the last one. However, you'll see there's no product fee on that. And again, you get cash back of £1,250. So the only difference between the previous product that they looked at and that we looked at together is one of them has a product fee and one of them doesn't. And obviously the one that has a product fee is a slightly lower interest rate than the one that doesn't. And if you don't know which option is best for you, like I've said in previous videos, that's not something that you need to work out. A mortgage advisor will be able to help you and educate you on which one is more financially beneficial, dependent on your exact situation. Now, one final thing that I'll mention about Vida Home Loans is they are in fact one of the mortgage lenders that credit check rather than credit score. And basically what that means is they will just have a look at the hard facts, your circumstances. They will look at their lending policy, and if you meet their lending policy, then in theory, you will pass the agreement in principle and you should pass the mortgage underwriting process, which is great. And like always, obviously we've highlighted some of the key lending policy and lending criteria here as well. There are multiple other factors that Vida will look at when ultimately deciding whether they're going to lend the money to you, such as your employment status, how long you've been working for, your financial outgoings, your nationality, your rights to work in the UK. All of these different things will be taken into account. So it's just important that we look at the case as a whole and bear in mind that there will be other factors at play other than the things that we've just mentioned in this video. So there you have it, Vida Home Loans 97% loan to value mortgage range, which allows potential home buyers without a perfect credit history to buy a home with as little as a 3% deposit. Like I always say, it's not going to be perfect for everybody, but maybe if you do just have a 3% deposit and your credit history isn't perfect, it might be a great option for you. So, like always, if you do have any questions or you have any ideas for future videos, feel free to pop those in the comments below. Alternatively, you can send us an email, and the email is in the description. And please make sure that you hit the subscribe button and turn on notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.